understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
We are back with another live episode of the Tech Behind FinTech. Totally excited about today's episode. We're going to be talking about open banking and how does it work. Joining me is my esteemed guest, Adedeji Olowe. How are you today? You're on mute. Let's take you off of mute.
Okay, hi.
Hey.
Good to meet you again, and I'm happy to talk about open banking every single time. So let's get into it.
Love it. So before we get into it, my guest has an extensive bio, and I want to make sure we read it so we're all familiar with him. Before we get into that, we're doing some housekeeping. So we're streaming live from Facebook, LinkedIn, YouTube, Twitch, and we also have a live stream going from Instagram. That's behind the scenes, but to my Instagram folks, if you want to be on YouTube, Twitch, or LinkedIn, then you can comment on the show and we'll post your comments. If not, you can stay in the background. So, with all that being said, let's get into it. Adedeji is the founder and Lendsqr, the loan infrastructure fintech powering lenders at scale. Before this, he led Trim Limited, the corporate VC of the Coronation Group, which invested in Woven Finance, Sparkle Bank, Clean, and Light, among others. He has almost 2 decades of banking experience, including stints as a divisional head of electronic banking at Fidelity Bank. He drove the turnaround of the bank's digital business. He was previously responsible for United Bank for Africa's group payment card business across 19 countries. Alongside other industry veterans, he founded Open Banking Nigeria, the nonprofit driving the development and adoption of a common API standard for the Nigerian financial industry. Beyond open APIs, Adedeji works deeply within the fintech ecosystem. He's the board chairman at Paystack. Adedeji is a renowned fintech pundit and has been blogging on technology and payments at adedejiolowe.com since 2001. That is amazing. With everything being said about Lendsqr and what you've done with open banking, I'm amazed that you've been blogging since 2001. You are a veteran in this content game. I mean, everyone else, like we're babies compared to you, man. 2000, you've been doing it for a long time. That's amazing. Seriously, you were doing it before content was even a thing.
Well,
what made you start getting into it that early?
I think it's because of my background. My mom was a lecturer, so I grew up in an academic house, so she was always writing. I think that was it. I can remember getting into trouble when I was in secondary school, writing a lot of rubbish about my friends. It was just fun, right? But I just love writing. And what I found out is that writing is one of the most powerful things. Look, the world changed because of writing. Immediately, Gutenberg started printing the Bible, and it was accessible to a lot of people. Writing possibly is the very best way to disseminate information all over the world. So that's it.
No, totally amazing. And you're absolutely correct about that. The world has been impacted with writing. But when I first read that part of your bio, I was totally blown away. So it's like, wow. Right now, obviously, across the internet, everyone's talking about content. Companies have adopted it. It helps small guys become bigger known. It's part of every marketing team knows about content, writing blogs, posting it. I mean, it's a standard. So the fact that you've been doing it for over 20 years on this subject, I think is totally amazing. And I want to give you kudos for that. I was when I read it, I was like, wow. And then I went to the site, and let me post your personal site where you've been blogging. I was like, wow, you have some really good content dating back for years and years.
Thank you.
Let me post the I'm gonna put the site up on the if anyone sees it. Cool. So you can go there. Really, really a lot of historical content there. Really good stuff. And we have our first comment. Probably know this person. Hey boys, I see you. Happy to learn more about this topic. Nice. Thank you, Ridwan. We appreciate
Redwan's his friend.
We appreciate that.
No.
All right, so listen, open banking. I want to jump into it because I know we're going to talk about a lot of different topics around it. I want to get into open banking Nigeria. I want to get into the regulatory stuff, the global impact, and so forth. So, what is open banking?
So the interesting thing about open banking is if you ask 20 experts to give you a definition for open banking, you're probably going to get about 30 definitions. It's super confusing, right? Sometimes, but what I would tell you will be like a definition that is common, that is also acceptable in Nigeria. And basically, open banking is like a standard in which banks are able to share information, right, via APIs, common standard. So a few things are defining open banking. Number one, you want to share information, right, with consent, or bank within a jurisdiction speaking the same language. Now, so sharing information alone is not open banking. Sharing information via API is what banks have been doing for 500 million years. It's not open banking. Every bank has to speak the same language. That's what makes it open. So the open in open banking is actually more about a common standard, right, than just sharing alone. Because language is a very powerful thing. And language is only language if two people or more can understand what they're saying to each other. If I could speak to you alone, that's just a code. But if we all speak the same language, then it becomes something that binds everybody together, right? So that is what open banking is all about.
So let's get into some basic questions, right? What incentivizes a bank to even open their platform up?
So it's a big question that comes every time, and but this is underpinned by the concept of the network. So imagine a world where, in fact, let me put it this way: at the early stages of banking, especially in Nigeria, let's look at about up to like 15, 16 years ago, before we had what they call faster payment, being able to send money between banks. Senior executive in bank in those days used to say, why should we enable customers to be able to send money to another bank? But what you found out is that any bank that doesn't connect with each other, if you don't remove the barrier and the friction and the path of your customers, then you're never going to grow. Because what you're trying to do is to build your own individual silo, your individual ecosystem. Is almost impossible to do that. Same thing comes to the internet. For many of us that are old enough to remember the days of Microsoft Network and the other legacy network that we have, AOL, right? You found out that they created a walled garden, but you couldn't bust out of that garden, and that effectively killed it. It started, but they couldn't grow. But once the internet became open and any client could talk to any server, you could browse to any website, the internet took off. So the same thing with any bank. Any bank today that says, "Oh, I'm not going to share data with other people," what happens is that they becomes increasingly isolated, and then that's going to be the end. Because it's in the nature of human nature to communicate, it's in the nature of business to interoperate. So not wanting to do that is going against the grain of nature, the grain of progress. So banks need to open up more for survival than for anything else.
We know that across the board in the EU, they have PSD2 and working on, I think a new standard now is coming out, the PSD3. So in certain environments, it's a regulatory standard. As part of that regulation, open banking is. In the areas where it's not, it's incentivized But obviously banks don't have to do it. But based on your answer now, it's better for the entire ecosystem and it helps the bank out in the long run. What about the potential security implications of opening up your API and things of that nature?
Okay, so there are security considerations across multiple areas. In terms of standards, right, at the maybe the basic technology level, the security issues are largely contained. So, for example, information passed through are encrypted. There are security standards to be met before you can be certified to be open banking ready. So that's great at that level. Where we're going to have a lot of concerns will be in terms of customer information and consent. So the first thing is that customers may be tricked or customer may give consent to access to their information in ways they didn't imagine the information would be used. Right. So imagine right now let's say you are using a personal financial information app that is able to link to all your bank accounts. Right. The system picks your data. Now, your data was secure with the bank. Your data was securely transferred, but somehow that company got hacked and all your data is out. That's a big security issue because anybody seeing those information, the data about your transactions, effectively knows more about you than probably your significant partner may even do, right? Because financials is what we want to keep in place. That is one big problem, right? And that has to come from even the standard for security not being applied to banks themselves, but being applied to every single person across the chain, because a chain is only as strong as its weakest link. The other one will actually also be about consent. Um, a lot of times, we have this information dark principles, things we do, dark acts that we have in information system where sometimes people don't know what they're consenting to because some of those legalese are hidden in very long, tiny text that nobody can read. And then you think you're consenting for you to buy a can of Coke, but somewhere somebody's aiding or not only buy a can of Coke, we're going to talk about your life and everything that you love. You don't know. So consent also has to be very critical. It has to be clear. It has to be in such a way that the customer cannot uh, be confused. In fact, in my world of open banking, we call it explicit consent. So not just consent, explicit consent. And one of the things we're building into open banking in Nigeria is to say that when given consent, not only do you give consent for what a fintech can do, you're also giving consent for how many times they could do it and for how long they could do it. So if you are a PFM, I could say that you could only check my bank account once a day, and in 30 days' time, this access should be revoked. It's one of the standards we're trying to push forward because we know that the PSD2 works very well in Europe, but Nigeria is a different kettle of fish. We need to make sure that it works very well because with the power that comes with open banking, if it's not well taken care of, it could cause more harm than good.
Let's get into a few of those security concerns because consent was the second one. I want to get into that. I want to dive into explicit consent. So I'm interested in that. I want to address the first one that you mentioned about the third-party providers and their lack of security impacting, the customer at the end. So, because it sounds like then you're getting into a supply chain issue, right? You have this ecosystem, but then as you start going down the line, customers leave themselves unknowingly, right? If that third party provider gets compromised, now that information is out. Are there some examples of that in the past that we know about?
So, if you recall very well, at one time, I can't remember which one. I think it must be Experian in the US that got
Yeah,
hacked. Now,
they did.
so basically, right? Usually, as an individual, you don't even give your data to the credit bureau. You took mortgage, you took personal loan, car loan from your bank. Your bank gave the information to Experian. Experian got hacked, and suddenly all your life stories is on the internet, right? That's a big example of one. So a PFM, for example, personal financial management, maybe an app to manage all your savings, move your money around. If any of them should get hacked, you are going to be in serious trouble. Because it's one thing for money to be taken from your account, which is one level of risk, right? But that is much more difficult to do. The worst one would be like your information being out there in the open. Then even anybody wants to take advantage of you, right? Good, right? You're in Nigeria, for example, somebody knows you have 20 million in somewhere, then they could kidnap you and say, you know what, just use your, but we know you have that money there, just transfer to us, something like that, right? So,
So, I mean, and that's a really important point. So now you have the larger the banks itself, right? The financial institutions, right? The FIs.
yeah.
Now you have these third-party providers wanting to connect to them. So there must be now certain standards for those third-party providers to gain access that the bank must have to set aside. Say, okay, we're by regulation in certain countries, we have to provide open banking. But for you to connect to us, you need to adhere to certain standards. You aware of any of how that process works?
Okay, so what we're doing in Nigeria is, which is still ongoing, first and foremost, before you can use open banking, you have to be licensed by the central bank. Now, but before you can be licensed by the central bank, there are tons of things you have to have for central bank to give you a license. Now, most of those things that central bank will demand of you in terms of either at the early stages or continual, what do you call it, audit and compliance, they are strong enough for you to be compliant. So that's it. By just limiting direct access to those who have central bank license, you kind of limit the blast radius. But then those are providers to fintechs as well. So the chain just gets a little longer. So it means that those companies must also, those fintech must also be required to demand those services or those level of security compliance, right, from anything that wants to connect to them. Because this thing is like a chain. So on one side, we have the banks, right? Next, you have what they call the PSSPs, right? These are payment service providers, PTSPs, switches, other banks. And then you now have fintechs, right? Who are maybe PFMs, who are like lenders. Because at the level of being a PFM, being a lender, you may be a fintech, but you may not be licensed by the central bank. There's nothing wrong. Now, those second degree operators who are sometimes the owners of the customers are the ones where the risk is at the highest because they are less regulated or unregulated, and so they have less at stake. If you have a CBA license, if you have an FDIC license, if you are licensed in the UK or Europe, there are few things you don't play with because you could be in serious trouble.
That makes sense. So, just to reiterate, right? So now we look at those three entities that you mentioned, those three levels, but on the other side of the fintech, where they have direct access to the customer, in order for them to be part of that open banking ecosystem, they need to get licensed. Did I hear that correctly?
Yes.
Okay. So, and in getting licensed, like any other license throughout the world, globally, right? You have to adhere to certain standards, whether that standard is SOC 2, whether in other countries it may be ISO 27001, you have to adhere to certain standards. In addition to, right, some other internal practices. So you adhere to that and then you get in. It's not like with this open banking concept that you're a third party provider, you're just in it and you're going to start connecting. And that's
No.
how that security risk is mitigated. Does that sound like an accurate
Uh, uh,
summary?
Absolutely. Yes, that's the way it is. If you are not licensed, you can't connect. So, and this is where the definition of open banking gets very confusing because everybody feels open is the door is open, let everybody strolls in. Actually, open just means we all speak is a common language. Access to open banking is regulated in every single jurisdiction. Not
No,
just
that's that,
regulated, heavily regulated. Yes, absolutely.
that that's I love that. So okay, so now we understand the supply chain risk in terms of the third party providers and so forth. You explained that. I want to get into explicit consent because I think you know just from the consumer end, I've noticed it at times. I didn't know the term explicit consent until you just mentioned it, but I noticed that in connecting to certain things, they'll ask you, okay, you have to recertify, not recertify, but re-answer these questions, maybe 30 days or maybe something like that. How does that process work? I want to further understand explicit consent from the fintech's perspective. Like, how is that built in? What's the process there?
Okay, so let's talk about Europe because we haven't gone live with open banking in Nigeria. So let's talk about the UK. So the UK has two rules, right? First, there's a rule that says open banking has to be kind of reauthorized every 90 days, right? So it means that, so for example, if I take my NatWest Bank account to be ready for my Monzo, every 90 days I will need to reauthorize it. Now, well, it's good, but it's extremely annoying as well. People don't like it because you know what? They just feel I've given access, don't disturb me. Then also, we have what they call the SCA, strong customer authentication. So if you want to do payments with your open banking, it requires that the customer must authorize it online real time. Now, that has created is supposed to solve a problem in Europe, especially the UK, but also created some significant friction in such a way that it has kind of limited the adoption of open banking for e-commerce payment. So, for if you look at most e-commerce experience, whether you are doing mobility like Uber, whether you're doing e-commerce, you're looking at Amazon, and the rest of them, whether you're doing loan repayment, you really want to authorize your payment method, right? And then just leave it and then just go your merry way. And then you want your transactions to happen seamlessly. With things like SCA, it doesn't happen. So, how we're solving that in Nigeria is something interesting where when you grant a consent, then you could say something like, I'm granting you right to see my bank account, but you can only do it once a day until this period. I'm allowing you to transfer money from my account, but you can only do up to 50,000 naira, right? Cumulatively, but maximum of 2,000 naira at once, right? Or you can only do this 10 times. Now, this is some of the things we're trying to do, right? And we want it to work because this seems a whole lot more complex and complicated than what you have in Europe. But we hope this works fine, right? With that solves that problem of having to constantly come to reauthorize because you reauthorize because you don't want someone to leave some consent hanging there forever. But by placing limits around the consent that you grant, then you could actually kind of protect yourself for as long as possible.
And that's interesting. So you place these limits. Okay, you're being proactive now. So it's only so much that can be done if there is an issue per se, right? So you can't go over these amounts. So wow, so you're getting pretty granular, right? In these steps. So you basically, I'm envisioning. I want to understand how it works, but it from in my head, it seems like you'll have these pre-filled out questions with commonly things that people should look out for. Whether it's withdrawal limits, number of times you can access, and you're setting up this template in terms of your standard, and then people and different entities will then abide by that. Is that how it'll work?
So when the standard goes live, this is going to be one part of what they call scope, right? So normally when you want to grant authorized connection, right, you use a some kind of financial protocol called FAPI, Financial API. It's built on top of something we call the OAuth. So OAuth is a technology that, for example, you used to in using maybe your Apple ID or Google to sign into a third-party access. Now, FAPI is a much more stringent version of that. Now, what that does is when you use that kind of technology standard, you kind of have something we call the scope. A scope defines what a particular grant, right? Because when you are granting somebody an access, you have a grant can do. So we are the first to do this crazy thing, but we know it is needed for us to succeed in Nigeria. We can't leave it open-ended because it will be disastrous. We also can't leave it, we can't also cripple it like it's done in the UK because the friction will not allow innovation to thrive. So that's why we came up with this something that grants the right. Now, the way it's supposed to work is that when you land at a fintech, for example, you want to grant access, the fintech will call the bank, and the bank will call the what they call the consent provider. And then that will pop into your face and say, oh, you're trying to grant access to nnamdi.com. And nnamdi.com will be able to have access to your bank account. And then you can specify, okay, when you want it to expire, when, whatever, and then you click OK. Now that grant, right, that it creates what they call a token. The bank will then hand over the token to the provider, to the fintech. That token forever limits what the bank, what that fintech can do against the grant that you're given in that way.
Totally understand. When did open banking Nigeria start?
So the initial wait, I think the first time I know was I sent a mail to my friends. I said, let's do something. Was June 1st, 2017 at 11:58 p.m. Because I've been so what happened was like before we started open banking, then I used to be in banking. I left banking in February 2017. I was an executive director at Systems Fair at Remita. And at that time, I was in charge of products and services. And then we had this zany idea of creating an app where you could see all your bank accounts in one single app, one app to rule them all. On the face of it, it sounded very simple. And then I started having conversation with my executive friends across banks. And it was the most traumatic technology experience of my life. It was difficult. Just getting a bank balance or it was so impossible. And that was when people started telling me like, oh, you were in banking, you didn't know that it was this crazy, it was hard. And I said, okay, two things could happen. I could join you guys to complain about this, or I could do something about it. But then it felt impossible. Like, how could we just change the financial ecosystem in Nigeria and let all the banks speak the same language? But because of the kind of person I am, I just couldn't let it lie. So one day I just told my friends, send a mail to them, let's do something. And that was it. So open banking could say unofficially June 1st, officially will be like March 2018. That was when we had a real public event, brought in one of a director from Central Bank, and it was a good program. And that officially started. So we say we've been at this now for like over 6 years, but 5 years officially, but over 6 years unofficially.
Lots to unpack, right? In a sense that what you're doing is changing the way the financial institutions in a country, totally changing how they do business.
Absolutely.
For some, that sounds impossible, right? But you came up with this. You sent emails to a friend. I mean, sounds overly simple. I want to get into exactly how did you go about doing that. And now you're at a stage in which it's taking form, and it's becoming normalized. How did that process work? Like, it just sounds it sounds like a lot, and I want to understand it. Like, how did you even coordinate with the government? Like, what was the process?
Yeah. So when I wanted to start, the reason why it took that long for me to start, or while it took, where I remember it was 11:58, was because I didn't know I could do it, and I felt I could fail at it, right? But I think I came to a realization that if you fail at it, someone is going to fail at something else, and then they'll forget that you fail at something, And the future me just couldn't imagine that I didn't do anything. So I sent a mail to my friends, senior people. They could all listen, we started talking, but then we need to start talking to banks. We need to start talking to the central bank. And a whole bunch of other people joined. In actual fact, so a bunch of other people also joined as well. Today, we have literally almost all the top fintechs in Nigeria are members of open banking, including out of the big four, 3 of them are part of it as well, which is KPMG, PwC, and EY. These guys have been at this with me for so long, and everybody knew, and everybody knows that look, if we could get this done, it will create so much value that it's almost impossible because by speaking the same language, financial technology in Nigeria could go 100x. Whatever we're seeing right now is nothing compared to removing friction and letting things fly all over the place. And people always think, oh, banks don't want this. They will fight against it. I've never seen one bank. We've never spoken to a single bank that says, no, we don't want this. Yes, the banks are not fast. No. Banks can frustrate you. Yeah. People would tell me, if I remember one global impact investor was going to give us money and they stopped because they felt CBN will not allow us to do this. But if I told you something, you won't believe it. The fourth corporate body we have talked to are beyond individuals that are like crazy people like me. CBN has been the most like excited about open banking, right? If we wish we could go faster, but CBN is government. No matter what you do, government will always be government. But in reality, they've been the most supportive and been the most open. So that is what has taken us to this stage.
People not familiar with the Nigerian banking system, can you explain the role of CBN?
Also, CBN is a principal in the school, is a referee in a game. Just imagine MMA without referee, then you know that you go to bury a lot of people, right? So that's the way it is. Nobody likes referee, especially when they are ruling against you. But without them, you don't have a game. So the role of CBN is to make sure the rules are created and people follow the rules. Without them, you can't have anything.
And I'm gonna just add a little summary there for those, and a lot of my audience are in the U.S. CBN, Central Bank Nigeria, is similar into like the FDIC in America, and so I think it's so funny you mentioned MMA as an example. I'm I'm into like Brazilian jiu-jitsu, and a lot of my friends I train with are in MMA. So, and they're watching on Instagram. So it's funny that you use that as an example. So they totally get that example. But I just wanted to let the general audience know. I would think, based on what you're saying, I see the incentive for the fintechs, 100%. They're like, listen, we provide you open banking, you'll help our business. The two that I'm most surprised with in terms of just understanding, and I'm not pointing fingers in Nigeria, just in general, government all over, everyone says moves slower than industry. That's just a fact that everyone talks about. So I would think the biggest hurdles that you would have had to face in terms of open bank Nigeria is from the central bank Nigeria and also the incumbents, the larger banks. But you're saying that. So how was that navigation?
So I think in terms of speed, that's a challenge, right? And I think like your foreign audiences will tell you, government and speed don't usually go together, right? That's the only challenge. Beyond that, nothing else. No pushback, no nothing. It's been absolute awesome support from everybody downward. In fact, we have a bank approached us by itself and gave us funding for part of what we do without even asking for a dime. They did.
Do you feel that because of I'm going to ask my question and then I'm going to jump in. An audience member has a question. I like to give them priority, but I'm going to ask my question first. Do you feel because of what's happening in open banking globally, right? From the EU to Japan to Australia to
Brazil.
everywhere, right? Do you think that's what made, when you brought this idea up and started to approach these entities, do you feel that made it a lot easier?
I would say yes and no. Yes,
Okay.
because when I was discussing with banks and the central bank, it was easier to just point to what's going on in other places. But then Nigeria was pretty early, right? Anyway, so we didn't have too many places to point to. But nevertheless, that helped. And the interesting part also is that Nigeria is the first country in Africa to do it, probably first among developing countries as well. So we are still early stages as well, despite the fact that we've been at this thing for 6 years. We are still way ahead of everybody else. In Africa today, I don't think there's anybody. People talk about open banking, but there's no other country that has any codified regulations or operational guidelines for open banking. Nigeria has three. We have the NDPR from the NISDA. We have the open banking regulation, which actually says let there be open banking. And then we have the operational guidelines, which defines how you're going to do open banking. Right now, we are at the stage of implementation, and the implementation will spell out the technical guidelines and implementation. So we are right in the middle of all that, right? So it influences, but then if we could have done it as well, even if there was no open banking globally. Because there are things we've done in Nigeria today that are not common. So, for example, globally, in most countries, you have national identity system. In the US, you have social security, even though it's not a proper ID system, but there is something that identifies adults. In Nigeria, banks came together and created what we call the BVN, Buy Verification ID. It's a biometric-based stuff. The only country that has something there, the next country to have something to this will be one of the Scandinavian countries. I think it's called Bank ID. So that would be either Norway or Sweden. I can't be too sure which one. It's not a common approach. So we could have done this in Nigeria as well because it was solving a problem.
Let's get into the audience comment or question. Simeon. Okay, open banking is a great innovation offering financial services in Nigeria. It will make credit offerings more effective and drive economic growth. You want to comment on his comment?
Oh, there's nothing to say. Absolute truth. Absolute truth. So,
I mean, I thank you very much for the comment. Really appreciate audience support and feedback. Do you see, based on what you said around other African countries, Nigeria taking the lead? Have you been approached, or have you approached other countries in Africa to set up standards or work within their ecosystem?
In fairness, I haven't approached anybody, but we have an informal global ecosystem of open banking players where we all speak. At one time, all of us from Uganda and Kenya, we used to have these informal conversations ongoing. So that's where we are. And in fairness, also, because look, open banking for me is non-profit. I have Lendsqr then as a day job, which I don't have enough time for. So it means that I'm also limited in certain ways on how many things I could do at the same time. Best to put. But we know fully well that once we go past the implementation stage, it's going to be a whole lot easier showing other African countries what could be done and helping them to do it. So, but if anybody from other country wants to ask questions, we'll be more than happy to help.
I want to keep going. I have some more questions around that. We have to take a moment for our sponsors. So we're going to play our sponsored commercial, and then we're going to get right back into the episode.
Are you an emerging fintech with a limited budget seeking more sales and partners? Introducing Strategic Generation, your partner in leveraging cybersecurity for sales and partner enablement. Fintechs often lose opportunities due to unsophisticated cybersecurity programs. That's where we come in. Strategic Generation assists with due diligence, security posture visibility, penetration testing, and on-demand virtual CISO services. We connect your systems to our partnered platform, and voila! Instant access to real-time diagnostics and compliance frameworks such as SOC 2 and PCI DSS. Gain the confidence of prospects and partners. Strengthen your cybersecurity program and drive success. Stop losing deals due to cybersecurity. Visit strategicgeneration.com and click on On-Demand CISO to connect with an expert. Are you an...
All right, thanks for that brief introduction. You're currently on mute. Let me see if we can unmute you. Adedeji, you're on mute right now.
Okay.
Okay, great. So another question I have for you now is can you give Lendsqr, your CEO, and founder, can you give what does Lendsqr do? Because I have some questions around open banking in terms of Lendsqr. But can you give a summary of Lendsqr and what do you do there?
Oh, thank you. So Lendsqr is like AWS or Shopify for lenders, right? I always tell people this story like it's nice to give credit to VCs, but I would say that AWS has done more for the startup ecosystem globally than anybody else. Why? Because it completely removed the barrier to launching anything. So when I started my career, for example, and you probably will know this, if you had a bright idea, you probably can only build it and then you look for a big, maybe enterprise to sponsor it. You know, because for you to launch a service for yourself, it means you have to raise tons of money, have your own data center, internet connection. It was just beyond everybody. But then AWS came on the scene in 2006, made cloud computing available for everybody. All you had to do to find out whether your stupid idea is really stupid or great was to write the code and just dump in there. And what it did is that it reduced the cost of failure significantly. So millions of people all over the world started creating stupid things. And out of those stupid ideas rose large, what do you call billion-dollar valuation companies all over the world. But the most important thing was like that that barrier to failure was significantly reduced. Same thing for social media, right? What we're doing right now, if we were to doing 20 years ago when CNN came around in 1981, it was a big deal. 24/7, if they wanted to cover anything, the shipping, your satellite dish, OB vans, outside broadcasting station vans. Now I'm in my apartment, you are yours somewhere, time zones apart, just a click. Now, that was the idea. And so we look at Africa and say, in Africa, in Nigeria, Africa's 1.4 billion people, Nigeria, 200 million people, little or no access to credit. But then being an engineer, we start asking, why don't we have access to credit? Because lenders don't want to give loans. But these lenders, are they stupid? Look at the opportunities. Why can't we give loans? But it meant that if they were going to give loans, then people aren't paying back. Why are people not paying back? Because it's difficult to build the kind of technology that will ensure people pay back, And so it meant that the biggest lenders of tomorrow didn't have the money, $500,000, $1 million to build sophisticated technology. Look, nobody sees the future, so it's impossible to know who's going to be the winner. That's the truth. By creating Lendsqr, we literally, what used to cost maybe $300,000 or more is available for you for free in 5 minutes. Right. And before you think what's going on here, you're using StreamYard to simultaneously publish this thing live on Instagram, on Facebook, on YouTube, on LinkedIn. Can you go back in time, like maybe 10 years ago? How much do you think you would think to do StreamYard? Possibly. You can't imagine. Very expensive technology. That's exactly what we're doing for lending because we honestly believe that it will make lending very convenient, profitable, cheap to implement, cost effective, highly scalable for lenders. Nigerians and Africans will have access to credit. Now, what do people do with credit? People build dreams with credit. People go to school with credit. So instead of sending that little girl to come and become somebody's, house girl, somebody's trainee in the market, you could borrow money for her to go to school. Or the woman that starts her business, she could borrow money to start selling wares and repay. You could start your business, short-term loans. If somebody has health problem because health is poor in Africa, they could at least borrow money to stay alive for them to be able to create value. If we support those people, the lenders that will give them money, they will solve that problem. That's what Lendsqr is all about.
I think we have to do another show on credit in Nigeria and Lendsqr. I think that'll be our next show because right now I consider you a friend of the show. So when I have these friends of the show, I like to bring them back on and really jump into topics. Because I have a question. I know we're almost out of time, but I have a question on that. So for Lendsqr, is your customer the actual lending provider? Like they'll go on Lendsqr to set up their business, right?
Absolutely.
Others now who are the end user will go to their shop, right, or their lending institution with what they set up and borrow money and then make you transact. So it makes it easier for a lender to set up an end-to-end lending business.
Absolutely. So that's why we call ourselves a Shopify for lenders.
Got it. Got it.
Just bring your business model, bring your capital, and we handle the rest for you.
How has Lendsqr enabled themselves to be in the open banking ecosystem? You started the open banking in Nigeria. You're also a CEO of an actual fintech. What lessons have you applied to Lendsqr that you've been learning and developing with open banking?
Oh, right. Okay. So one of the things is, let me put it the other way. I would say Lendsqr is the one learning from open banking, right?
Okay.
Right? Because open banking predates Lendsqr by many years. But both of them come from my proclivity to solve problems. I love solving problems as against ranting about it. I love to have a good rant, but a ranting without action is just noise, right? Right. So for me, what Lendsqr on one side, let's just imagine there are two different people, is also open, like literally on his knees, praying to say, let open banking succeed. Because open banking being available, right, will significantly transform and help Lendsqr to be able to serve its customers well. Now, how would this happen? Because, for example, in Nigeria, because the average person doesn't have access to credit, then there is no credit bureau for the average person. Like literally, maybe only 10% of customer or even less have records with credit bureau, right? So it means that lenders really rely more on the customer historical transaction data to make decisions. So by, for example, making open banking and data available, it means that the system, Lendsqr, will be able to have access to the customer's data on behalf of the lenders to be able to make smart decisions in terms of inflows coming in, their capabilities. You'll be able to know whether they could pay. Now, with open banking as well, you could have better repayment services. Currently, most lenders rely on debit card for repayment. Debit card is very flaky because if they fail a lot, customers could turn them off. All kind of random shenanigans go on with that. Using non-card payment method is much more secure, is much more reliable. So it just means that once friction is removed, things will just move faster. Now, that is where Lendsqr is depending on credit from. Now, open banking itself, the poster child, well, I could be wrong, but I strongly believe, like Simon said, the poster child or the killer app for open banking will probably be credit. So I live in the digital ecosystem in Nigeria, right? And I can tell you that for the non-card present transactions, debit card, what do you call it, direct debits and debit cards, more than 50% of it is driven by credit. So if so, the pent-up demand for credit is there. It's just that the size is small, right? So open banking will just demolish all those stumbling blocks and just let let everybody free.
This has been an amazing episode. Definitely, when you time permitting, I'd love to have you back on because I want to dive into a credit show because this is stuff, especially being in America, the U.S. And having a career and you have decent credit. You don't think about credit. So you want to go do something, as long as you've been paying your bills, you make a decent salary, you'll go get a credit card, charge it, pay it off. We don't think about it after a while, unless, right, you're in that, you have, a poor credit history. That's a whole other conversation. But if you have a certain background, you can get it. So talking to you now, and what you're saying, this is such a need in this country. I like to dive into that. And then maybe we can also talk about other countries in Africa and just talk about potential solutions. So it'll be a very interesting show. I'm throwing it out there now so my team and I, we can put it together. Then we'll shoot you the proposal and figure out how we can make an episode for it. But this concludes our show. Can you please tell the people how to find you and also, where they can find more about Lendsqr and stuff like that?
Thanks so much. I usually live in LinkedIn, right? My name is Adedeji Olowe. It's easy to find me. If you want to know about open banking, just do openbanking.ng. That's there. And for Lendsqr, it's lendsqr.com. Or you search for lending as a service. We literally own that word in a way. That's easy to find us.
Love it. Well, guys, listen, thank you very much for tuning in. Every week on Friday, 12 p.m. EST, you'll find us here at Tech Behind FinTech. You can visit us at techbehindfintech.com. We stream live from Facebook, LinkedIn, YouTube, and Twitch. Also, Instagram's not connected, so we have that going on a separate stream behind the scenes. And next week's episode is about cybersecurity unicorns or so. We have our special guest, Renee Small, so it should be a very enlightening show. Thank you very much for your time. Deji, thank you for joining.
Thank you so much.
Great discussion. I really enjoyed it. Certain parts of this, I'm going to listen to over so I can learn more. I love episodes like that. And
thank you so much.
You have a great weekend and best of everything and everything that you're doing. I'm going to check out Open. I've been to Open Banking NG before. I'm going to now further explanation of it. I want to dive more into it and learn more. Last questions.
All right.
Let me circle back. For Nigerians in the diaspora, us here, Nigerian Americans, the ones in the UK and everywhere, what can we do to help out with Open Banking NG?
Thanks so much. At this time, it's just advocacy, really, because we are at a stage where the stage is set. The government is deep into this. Advocacy just means being able to spread the word, maybe put little pressure to just make sure things move faster. And we'll be glad for that.
Excellent.
Yeah.
You have a great weekend. To all Tech Behind FinTech, every Friday, 12 p.m. Eastern Standard Time, you can join us. Yeah. Cheers.
Thank you. Bye.
Bye.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.